Imagine a world where the supply of gold suddenly halves. That's essentially what happens to Bitcoin every 4 years during the halving. These halvings, integral to Bitcoin's design, are events where the reward miners receive for adding new blocks to the blockchain is cut in half, thereby reducing the rate at which new Bitcoins enter circulation. This system of halving was engineered by Satoshi Nakamoto, Bitcoin's still anonymous creator, as a way to control the digital currency's supply and mimic the scarcity of precious resources like gold. This scarcity principle is fundamental to Bitcoin's value proposition, making it a digital gold of sorts. Historically, these halving events have proven to be catalysts for significant price increases. This is because as the reward for mining new blocks is halved, it reduces the influx of new Bitcoins, thereby constraining supply. If demand remains constant or increases, this restricted supply can lead to a rise in Bitcoin's price. This pattern has been observed in the 3 previous halving events in 2012, 2016, and 2020. However, Bitcoin and its surrounding ecosystem have evolved considerably since the last halving. We're now witnessing a confluence of technological advancements, regulatory developments, and market dynamics that could potentially have a more profound impact on Bitcoin's future. One key difference is the increased sophistication and versatility of Bitcoin's underlying technology. We're seeing the adoption of advancements like Taproot-enabled wallets and Layer 2 solutions, which promise to expand Bitcoin's utility far beyond just a store of value. Another crucial change is in the market structure. With the recent approval of spot Bitcoin ETFs in the US and the impressive asset accumulation by BlackRock's Bitcoin ETF, we're witnessing a paradigm shift in how investors engage with Bitcoin. But as we approach the 2024 Bitcoin halving, there are reasons to believe this cycle could be different. The unique circumstances surrounding this halving, from the technological to the regulatory, suggest that this event could mark a significant shift for Bitcoin, potentially affecting its price and adoption in ways we've yet to see. The Bitcoin ecosystem is evolving, and so are the ways people interact with it. This cycle of Bitcoin halving, due in April 2024, is set to be different thanks to a blend of technological advancements and a shift in market structure. The technology underpinning Bitcoin has seen significant advancements that are set to redefine its utility. The adoption of Taproot-enabled wallets has increased, enhancing both privacy and efficiency, and it doesn't stop there. The development of Layer 2 solutions, such as Stacks, brings the functionality of smart contracts to Bitcoin. This not only expands Bitcoin's utility beyond just a store of value, but also signals a shift towards a more versatile blockchain ecosystem. In addition, the burgeoning interest in decentralized applications, or dApps as they are commonly known, is further leveraging Bitcoin's robust security. This not only diversifies the applications of Bitcoin, but also strengthens its foundational technology, making it more resilient and versatile. But it's not just the technology that's changing. The market structure is also undergoing a significant shift. The approval of spot Bitcoin ETFs in the US and the impressive asset accumulation by BlackRock's Bitcoin ETF are turning points in how both institutional and retail investors engage with Bitcoin. These financial products are simplifying access to Bitcoin investments and are a testament to Bitcoin's growing acceptance in mainstream finance. The success of these ETFs, attracting billions in assets, underscores a robust demand that could potentially offset any sell pressure post-halving. These technological and market changes are not merely isolated events, they are part of a broader trend, reflecting the evolving dynamics of the Bitcoin ecosystem. These changes are not only redefining how we interact with Bitcoin, but also the very nature of Bitcoin itself, expanding its role beyond just a store of value. In conclusion, the technological advancements and shifts in market structure are set to influence the outcome of the 2024 Bitcoin halving. They are reshaping the landscape and setting the stage for a more versatile Bitcoin ecosystem. These technological and market changes signal a shift towards a more versatile Bitcoin ecosystem. History doesn't always repeat itself, but it often rhymes. This adage holds true when we look at the price trends following previous Bitcoin halvings. Each halving event has been a significant milestone in Bitcoin's journey, often propelling it to new price heights. With the reduction in the supply of new Bitcoins entering the market, demand has historically outstripped supply, leading to price surges. For instance, the first Bitcoin halving in November 2012 saw the price of Bitcoin rise from around $13 to over $200 in the following months. The second halving in July 2016 pushed Bitcoin from around $600 to nearly $20,000 by the end of 2017. The third halving in May 2020 propelled Bitcoin from around $8,000 to an all-time high of nearly $65,000 in April 2021. However, it's important to note that while each halving has been followed by a notable increase in Bitcoin's price, the multiples of price increases observed have been diminishing. This trend has sparked speculation and debate within the crypto community about the potential impact of the 2024 halving on Bitcoin's price. Some believe that the 2024 halving will follow the same trajectory as previous ones, leading to yet another significant price surge. They argue that the reduction in new Bitcoins will continue to create upward pressure on the price, especially considering the growing interest in Bitcoin from both retail and institutional investors. Others, however, argue that the unique circumstances surrounding this halving could result in a different outcome. They point to factors such as the advancements in Bitcoin's technology, the changing market structure, and the evolving regulatory landscape, which could potentially influence Bitcoin's price dynamics in ways not seen in previous halving cycles. In conclusion, the 2024 Bitcoin halving is shrouded in anticipation and speculation. Will it lead to a significant price surge as we've seen in the past? Or will the unique circumstances surrounding this halving result in a different outcome? Only time will tell. The 2024 halving could continue this trend or defy it, given the unique circumstances surrounding it. The world of crypto is no stranger to regulatory scrutiny, and the landscape is changing. The aftermath of the FTX saga, where regulatory bodies stepped in to address market manipulation concerns, sent a clear message to the crypto community. The need for risk management and due diligence can no longer be ignored. This has led to a cleanup of sorts, with the expulsion of bad actors and excessive leverage from the market. While this may have initially caused some apprehension among institutional investors, it has also paved the way for a healthier market environment that could foster organic growth post-halving. Consider the macroeconomic factors at play. We're living in an era of unprecedented financial expansion, with central banks around the world taking a more active role in market operations. This has led to a surge in the money supply, which some fear could stoke inflation. Bitcoin, with its fixed supply, is seen by many as a hedge against this inflationary environment. As the halving reduces the rate of new Bitcoin entering the market, the digital asset could become an even more attractive store of value. Then there's the regulatory landscape. In recent years, we've seen a gradual shift from outright bans and blanket restrictions towards a more nuanced approach. Governments and regulatory bodies are beginning to recognize the potential of cryptocurrencies and are working towards creating a regulatory framework that balances innovation with consumer protection. The US approval of spot Bitcoin ETFs, for instance, is a significant milestone in this regard. This not only simplifies access to Bitcoin investments, but also serves as a testament to Bitcoin's growing mainstream acceptance. Of course, the journey to widespread acceptance and adoption is not without its challenges. Regulatory hurdles, technical complexities, and market volatility remain significant barriers. But with the right regulatory framework and market conditions, the path to overcoming these challenges is becoming clearer. In sum, the recent regulatory developments and macroeconomic factors are shaping the crypto landscape in ways that could significantly impact the 2024 Bitcoin halving cycle. These developments have set the stage for potential organic growth post-halving. The Bitcoin halving doesn't just affect prices, it also impacts the miners. With each halving, the reward for mining new blocks is slashed in half. This fundamentally shifts the revenue model for miners, pushing them to rely more heavily on transaction fees. Now, this might sound like a setback, but in reality, it hints at a more sustainable model for the mining industry. Imagine this: a world where miners aren't just incentivized by new Bitcoins, but also by the sheer volume of transactions taking place on the network. It's a model that encourages growth and stability rather than speculative boom and bust cycles. And as the block rewards decrease, the value of transaction fees in the miner's revenue mix will inevitably increase. This transition is not just a necessary adjustment, it's a transformative shift. It's critical for maintaining network security and incentivizing miners in a post-halving landscape. And it's this shift that could truly set the 2024 halving apart. As the clock ticks down to the 2024 Bitcoin halving, anticipation within the crypto community builds. This cycle promises to be unlike any other, shaped by a unique blend of technological, regulatory, and market dynamics. The technological strides in Bitcoin's ecosystem, such as Taproot-enabled wallets and Layer 2 solutions, are set to expand Bitcoin's utility, transcending its traditional role as a store of value. On the market front, the advent of spot Bitcoin ETFs signals a paradigm shift in Bitcoin engagement and points to its growing mainstream acceptance. Meanwhile, the regulatory and macroeconomic landscapes continue to evolve, underscoring the importance of risk management and due diligence. The mining sector too anticipates a shift as transaction fees become a significant revenue source. All these factors converge to suggest that the 2024 Bitcoin halving holds promise of significant changes, marking a pivotal moment in the evolution of Bitcoin's role in the financial and technological ecosystem.